Well, Wall Street worries, of course, that the president's economic agenda won't happen this year, if ever. I hope that's not the case. Let's bring in financial analyst Heather Zumarraga and PNC Wealth Management Chief Investment Strategist Bill Stone. Heather, let me go to you first. What do you tell your investors on a day like today?
Well, I think the markets were due for some sort of pause or pullback with valuations near all-time highs, and most of the indices were led only, when you look at market breadth, they were only led by 5 to 10 stocks or companies in the whole sector. Most of the recent gains, take the NASDAQ, for example, 5 companies amount for 50% of the NASDAQ's recent gains. So we had a lack of market breadth across the board, and the markets were just looking for an excuse for someone to take that first step out of the markets, and other investors have continued to follow suit today as we're rapidly selling off into the close even.
Yeah, Bill, I mean, I get the feeling that this has been a long time coming. The markets have been very resilient. They've been able to brush off what's been going on in Washington. But this was like the final straw, a memo involving Jim Comey, and all of a sudden, everyone's piling into gold and treasuries.
Yeah, I mean, we've gone 4.5 times longer than normal without even a 5% pullback. I'd say, though, you got to cut through the noise and get down to whether you think it's an opportunity or not. We would say it's really probably an opportunity because the economy is doing fairly well, and I'll say the U.S. economy and the globe really picking up a bit, so earnings have been good. I think you've seen that in the first quarter. You're likely to continue to see some good earnings. I don't think all this noise is necessarily going to change that. Again, you're probably going to see some volatility around worries, again, as you've been talking about, around whether the administration can get their tax cuts and tax reform through, but I think that will turn out to be noise in the end.
Let's bring in Doug Butler, Rockland Trust portfolio manager. Doug, what's the best thing to do here? Just kind of wait for the dust to settle, or is this a buying opportunity even?
I don't think we're right yet at the buying opportunity level. I mean, I think that it's a time to stand pat. I don't think it's certainly not a time to panic sell either, but I think, look, the 3 E's, the economy, employment, and earnings, are still all really strong.
Heather, what areas do you like in this market, given the volatility that's rising? But are there still areas that you like?
Well, like you mentioned, gold is rising right now on the backs of having people want a safe haven trade, as well as treasuries are catching a bid down at 2.23% on the 10-year. I'm not necessarily saying that I like them, but I will keep an eye on them as an indicator if the markets will sell off even more from where they are today, if this will continue. And keep an eye on financials and technology that led this market higher this year, and financials are actually pulling back the most today. So I'll be watching that sector.
Yeah, Bill, I was going to ask you about it, and Heather brought that up, the financials that have been doing so well. Look at these numbers. It's remarkable. B of A down 6%, Goldman Sachs 5.5%, Morgan Stanley down nearly 6%. Are you surprised by that?
I mean, it's a pretty tough move, obviously, but I think that's exactly a place where I would say we think is an opportunity, because if you believe the economy is going to continue to move along and interest rates are going to move up over time. Again, treasuries are way down today in terms of yield, so that presses on the group. If you think this is really just a flight to safety trade that comes off, I think it ends up being a real good opportunity, especially in that sector that's getting pounded.
Doug, Heather also mentioned big tech. I mean, those are the stocks we follow every day. It's just the money pouring into the big 5, the Fab 5, the Amazons, the Facebooks, Netflix. Do you still like those?
We like technology.
That's for Doug. This is for Doug. Sorry. Go ahead, Doug.
Sorry, no problem. No, we like Facebook and we like Google. We are less prone to the sort of more volatile Netflixes of the world. Those companies that are barely making money, and frankly, Amazon's almost there as well, because it makes money sometimes. But we think that your Facebooks, your Googles, your internet companies will be very strong. But I think the group as a whole probably has run a little further than we'd like.
Well, I just want to point out we are hitting where the sell-off is accelerating as we head to the closing. But let's get that back down to Laurie Rothman with literally about, 3.5 minutes left on the session.
Yeah, and they are, Ash, selling into the close here with the Dow off now 372, the S&P off 43 points. And boy, look at the VIX. We had been noting how calm the VIX had been, trading around levels of 9, 10 just in the last week or so. Well, today it pops up more than 30% to a level of 15.28 according to the big board right now. So that tells us that the fear index, that there's some fear being injected back to this market today, and it all goes back to the White House. You can see here that financials, as you were just discussing, are leading the markets lower. Goldman Sachs, for its part, making up 1/4 of the Dow's losses today. And then another 5 stocks, Goldman, no surprise, JP Morgan Chase, along with Apple, Boeing, and 3M, account for half of the Dow's 365-point decline. It looks like it's going to be a tough one for those long this stock market today. Ash.
Laurie, thank you. Let me get back to Heather. You know, for so long, Heather, it was the Fed that was propping up the markets with all that cheap money, but I feel like the economy is really starting to turn around. We're seeing some very encouraging green shoots. With that said, the fundamentals, I think, are there for these markets, right?
I don't know. You're right. Earnings season was really good, up 15% for companies across the board, especially in the S&P 500. But the Federal Reserve is on track to raise rates yet again in June. But are the reasons there, aside from being data dependent in terms of jobs, unemployment being at 4.4, and inflation ticking a little bit higher, I don't. What doesn't make any sense is that the 10-year's dropping lower, yet the Federal Reserve is increasing rates already. Yeah. 2 quarter basis point hikes in 2017. So something's got to give.
Well, that's a very good point. Bill, why don't you jump in there? The chances of a June hike now has been dropped to 30%. What do you think the Fed does?
I still think they hike. I think this is really the reaction to a one-day worry, the flight of safety. We do see this happen. The futures and everything show up with some. You end up with, I'll argue, some weird pricing. I don't think the underlying dynamics of the economy have changed enough to make you change overnight from essentially a 100% chance to down to this. So I'd still put my money on a June hike.
Bill's a bull. We can have a bull versus bear debate after the show.
So what do you have? Are you somewhere in between?
I think I'm keeping an eye on gold, and tomorrow I want to see if there's follow through. It doesn't look like this is a one-day move. If we're capitulating into the close, down even more, 370 now.
So what do you think, Doug? You looking at gold?
We're not looking at gold other than for a few select funds for inflation hedging. But to be fair, we think that we're with Bill on this in terms of thinking it's probably a 65 or 70% chance you get a raise in June, and then lower in December now, much lower.
Heather, Doug, and Bill, thank you so much for joining us on a day that we've seen a lot of red ink